أعوذ بالله الشيطان الرجيم بسم الله الرحمن الرحيم رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقهوا قولي. So this will be our fourth lesson in this course, the business accounting. And in our lesson today, we shall be talking in detail about the double entry accounting system. And this is a concept that we had already started explaining in our last lesson, the double entry system. So in our lesson today, so number one, this is what we shall cover in our lesson today. So we have an explanation of the double entry system. We shall also talk about the debits and credits and how to record transactions. We shall also have examples of double entry bookkeeping. And you shall also have some exercises at the end of the lesson. So I'm not feeling well. I have some sore throat. I guess my voice is clear. So number one is, what is the double entry system? So what is the double entry system? So the double entry system is a foundational concept in accounting. It is the foundation of understanding accounting. If you don't understand this double entry system, you might struggle a lot when it comes to understanding the concepts in accounting. So the double entry system is a foundational concept in accounting that states every financial transaction affects at least two accounts. And this is what we saw in our last lesson. So this system is based on the accounting equation, that is, the asset equals to liabilities plus the equity. So the essence of the double entry system lies in the idea that each transaction has equal and opposite effect in at least two accounts. So what they are basically telling us is that for each and every transaction you make in your business, it will always affect at least two accounts and with the same amount. So remember last week we were talking about the left side and the right side being balanced. So at the end of the day, it has to be equal. Yes, it will affect at least two accounts, but at the end of the day, it has to be equal. So this principle of accounting is what in Arabic is normally known as Nadhriyatu al-Qaid al-Muzdawaj. And Nadhriyatu al-Qaid al-Muzdawaj. Muzdawaj means double. So the double entry. So in each and every transaction, we normally have the Madin and we normally have the Da'in, the debit and the credit. So لكل عملية المالية طرفين أحدهما مدين والآخر دائن وبنفس القيمة. So if the Madin, for example, is $100, then also the Dain will also be affected by the same amount. So that is what is meant by what? بنفس القيمة. For example, if you buy a product, you buy a laptop for 100. So there are two accounts that will be affected. So you'll be having the cash account and you'll also be having the purchases account. So both accounts will be affected by $100. So that is the basic idea of Nadhriyatul Qaid al-Muzdawaj. Now, The double entry accounting is the what? As I told you, it is the foundation of accounting. And it's based on the accounting equation where assets equals to liabilities plus equity. That is the fundamental unit. Remember, the foundation. Again, here they're using the word fundamental unit to building financial statement. And the financial statement, you have the balance sheet, the income statement, and the cash flow statement. So the double entry system, it is the foundation to building the balance sheet, to building the income statement, and to building the cash flow statement. So if you don't have this background, then you'll not be able to actually, you'll not be able to make the balance sheet, the income statement, and the cash flow. So the basic concept of double entry is that a single transaction to be recorded will hit two accounts. So for each and every transaction, two accounts will be always affected. So in our next lesson, we shall be discussing about all these words, all these financial statements. So we have the balance sheet, we have the income statement, and we have the cash flow. We shall be discussing in detail in our next lessons. So the dual aspect in double entry system. Now, the dual aspect in double entry system said that it's still the same thing we're explaining. That is, every transaction has two aspects. Now, the two aspects in the ledger book, we normally have the left side and we have the right side. So when you're talking about the left side and the right side, this is what you are basically saying. We always have the left side and we have for each and every transaction, we have the left side, which is the debit, and we have the right side, which is the credit. So for each and every transaction, you have the credit, you have the debit on the left, and you have the credit on. So this is what they're basically telling us. So they're telling us the dual aspect in double entry system state that every transaction has two aspects. Number one, debit, an entry on the left side of an account. Then the credit, an entry on the right side of an account. So for example, if a company it sells a product for cash. For example, you're having a shop and you sell something, al-mabi'at, you just sell. If a company sells a product for cash, okay? So the cash, which is an asset, increases. So the debit will increase because when you sell, what happens? You get what? You get cash. So cash comes in. And the revenue, which is your equity, will also increase. So you will also credit there. You will also credit your revenue. So when you are selling a product for cash, the cash account will increase. And also your revenue, your equity will increase at the same time. So you debit and you also credit the what? You also credit the revenue. So this is basically the idea between the double entry system. So the debit is always the account that receives al-ati, then the credit is the credit account is the one that gives al-ati wal-akhid. So always there will be one account that is giving, there'll also be one account that is receiving. So for each and every transaction, there is one account that gains and the other account loses. Al-akhidh wal-ati. One account gives and the other one loses in each and every transaction. But you have to also understand it should always be with the same value. So now this is what they're explaining to us now in detail. The Nadriyatul Qaid al-Muzdawaj in Arabic. So أن لكل عملية المالية طرفين متساويين في القيمة أحدهما المدين والآخر الدائن. So you have the debit and we have the credit. So الطرف المدين هو الآخذ. Okay, دائما it is the receiver. It is the receiver. And if you come here, the debit. So the debit is al-madin. It is always doing what? It is always receiving. Al-akhidh. Man yahsulu ala al-qima. ثم الطرف الدائن هو العاطي. Man فقد القيمة. Man فقد, which is the credit. In this case, that is, it is giving. So الطرف الدائن is the credit. والطرف المدين, it's the debit. And the debit is the al-akhidh. The account that does what? The account that always receives. Okay. Now we have an example here. You have an example here of the double entry system. This is just an explanation. So the double entry accounting system records every transaction, every business transaction in at least two accounts. That is the debit and the credit. Now here we have an example. Adam borrows $300 from John. Adam borrows $300 from John. So in the double entry system, this is how you're going to record this transaction. So the cash account is debit. So what is going to happen to the debit account? It's going to increase. That is with what? With 300. It's going to increase with $300, right? So because you are borrowing, I'm borrowing money. So I'm borrowing money, my pocket is going to have something. You know, it's going to increase. And the payables, which is the credit, is also going to increase. The loan, I will have to pay. So yes, I am getting money. There is an increase in my cash, but also my loan, I'll have to pay in future 300. So these are the two accounts. My cash will increase, and also my payable is also going to increase, because still I will have to pay this $300 in future. Now, in detail, now what are the debits and the credits? So in accounting, debits and credits are the two fundamental components of the double entry system. So every financial transaction affects at least two accounts, as we have just said, and is recorded using both debits and credits. Now let us start with the debit. It is an entry on the left side, as I told you earlier, of an account that increases assets or expenses and decreases liabilities or equity. So you'll understand this. We have some examples. So you'll understand what is the meaning of this, that the debit, it increases the assets or expenses and decreases liabilities or equity. For example, when you buy equipment, you will debit the equipment account because your asset equipment are increasing. For example, when you buy anything, anything you buy, al-mushtarayat, you debit because it increases your account. Anything you buy, you debit. You buy a laptop, it goes to the debit account. You buy, for example, furniture in your business, you're going to debit it. Because anything that you buy, it increases your assets. Anything you buy, it increases what you have. Fil muqabil, we have the credit. This is always an entry on the right side of an account. That increases your liabilities, your equity or revenue, and decreases your assets or expenses. For example, come late. You come late and you disturb our class. Asia, what's your problem? I'll deduct your marks. I'll deduct 5 marks of your attendance when you come to class and you disturb the class. So Asia, I've deducted your marks for disturbing the class. So we have the credit. This is an entry on the right side of an account that increases the liabilities, the equity or revenue, and decreases assets or expenses. For example, when you earn revenue, you will credit the revenue account because your income equity is doing what? Your income equity is increasing. So how debits and credits work? So every time you record a transaction, the total amount debited must equal the total amount credited. That is, we talked about this last week. So this maintains the accounting equation and ensures the books are balanced. So this is the equation. And this equation is the foundation for double entry accounting. Whenever you make a transaction, at least one side of the equation must change. So this is just a repetition of what we were actually trying to do, trying to explain. Now, this is a summary. This table is very important because in an exam, you can be asked about this table and the effects it has and what it does to the debit and what it does to the credit. So the rules of debits and credit. To summarize how debits and credits affect different types of account, you can use the following rules. So number one, we have the assets. For example, we have the cash and the inventory. So with the assets, the debit will always increase and the credit will decrease. We shall see when we have examples. Then we have liabilities. With the liabilities, there is always an increase. For the increases you credit, and for the debt and the decreases in the liabilities, any decrease in the liabilities, you do what? You credit. Sorry, you debit. Then the equity, any increase you credit and any decrease you debit. Then the revenues, al-iradat or ad-dakh. So if there is an increase in your revenue, you'll always credit it. And if there is a decrease in your revenue, if your revenue, your income decreases, then you have to debit it. Then the expenses, if your expenses, masarif, if the masarif increases, then you need to debit it. But if the masarif decreases, then you have to credit. So you just have to memorize this. There is no trick. You just have to memorize this table. You just have to memorize the effects. Because you can be asked in an exam about this, the effect. For example, if an asset increases, what should you do? You can be asked, if an asset increases, do you debit it or credit it? And if, for example, if revenues decrease, do you normally debit or credit? So you can be asked such questions. So you just have to have an idea of this table, and what these accounts, do to the debit and the credits. Now, let us start. These examples will make it clear. So number one, we have the assets. And last time we said the assets, these are the al-usul. And in your organization or your business, you normally have two types of assets. We have the fixed asset table. For example, you have the machines, you have the furniture. So these are the fixed assets. Then we have on the other side, you have the current assets. The current assets, for example, money, the money you're having in your account or the money you're having in your bank, it is known as the current. And it is called current because it can easily, anything that is current can easily be converted to cash. But the fixed asset, you cannot easily convert them to cash. For example, if you're having a car, you'll have, and you want to sell it, you cannot easily sell it. You'll have to advertise it in the, for example, in the internet. You'll have to get the buyers will have to check the car. So it will take time before you convert this asset into money. Now, you normally debit an increase in cash. If your cash increases, you normally debit. And if your cash decreases, if the asset decreases, you credit it. That is the formula. So always debit increases the asset account. That is the cash, the inventory. Inventory are things in your store, and the equipment. For example, you buy a new computer for your business. You buy computer, and the computer is $1,000. So how do you write this in your ledger book? How do you record this transaction? So the computer, the asset increases, so you debit it. Computer asset account. So a new computer comes in. It comes in. So when it is coming in, then it is what? It is the 100 plus $1,000. So now your asset is going to increase. So you are going to debit. Okay, so that is the meaning of the word. The increase. You debit any increase in your asset. Anything you buy, you debit because it's going to increase your account. Then the cash account is going to decrease if I take money from my account and I buy. I'm going to have a minus in my account because my pocket is going to decrease because of this money, I'm going to buy it. So that is why you have the minus. So while my cash account decreases, my asset is going to increase. I have a computer now. Now, another example, you return a defective product to the supplier and receive a refund of $500. So you buy something, but later you realize that this product was having a problem. Even the computer, mathalan, you buy the computer, then when you get to your house or business, you realize defect. Defect means it has a problem. So how are you going to record this? How are you going to record it? So here there is an increase. Remember the cash is an asset. So when you return the product, the supplier is going to give you cash. So your cash is going to increase because now the supplier, you have returned the product and you've got the cash. So the cash is going to increase. But fil muqabil, the inventory, your store is going to decrease because you are taking back the computer to the supplier. So the computer is going out, that is minus the inventory. Then the supplier is giving you back your money. So that is a plus. Now, the liabilities. The formula, if you look at the formula, the liabilities, if it increases, you credit. If it decreases, then you debit. Now, so for any decrease in our liabilities, and when you are talking of liabilities, these are obligation. If you take a loan, you have to pay. If, for example, your suppliers, they supply you with product and you have to pay it in future, it is known as liability. So, and we have two types of liability. We have the short-term liabilities and we have the long-term liabilities. Ala kulli hal. Now, example, you pay off a loan. You pay off a loan of $2,000. You took a loan, you know? So you took a loan and now you're paying off the loan. So there are two things here. So number one, now you are paying the loan. So it's minus. Khalas, you don't have, it's going to be zero. When I'm paying the loan, I'm going to pay the loan. So that is why you have the minus there. I'm paying the day. So ma indi ay chain. Which account am I using? So you credit that account, cash. Maybe I'm paying the loan cash, so you credit the cash account. Or sometimes you can pay by check. So you'll have to credit the bank account. Okay? Then sometimes, so here you pay the loan. Sometimes you take a new loan. So when you are taking a new loan, this is how you are going to record it. Your cash, you debit because your cash is increasing. Your cash is going to increase. But you are going to have to pay the loan. Loan payable, you'll have to pay the loan by 5,000. So you credit the loan that you're going to pay. Okay, so you debit your cash account with 5,000. Okay, because now your asset is doing what? Your cash account is increasing. Okay, and liability, your increases. If the liability increases, you credit. Your loan is increasing. Every time you take loan, it increases, so you credit it. So these are the liabilities. Now the equity. Equity is your equity is what remains. Equity is what remains, and normally equity is assets minus the liabilities from our accounting equation. So what remains when you minus all the liabilities? What remains is now you are earning as the owner of the business. So here, Mathalan, they're telling us, so what happens? You withdraw $1,000 from the business for personal use. I have my business. So from my business, I withdraw some money and I'm going to use it for my personal use. So how am I going to record the equity? So if there is a decrease in the equity, I'm going to debit it. So that is why you have minus 1,000, because I'm taking money from my account. I'm going to do my private things. So that is why you have the minus. I'm taking money out of my business. Then how am I taking the money? So there is the cash account. I'm taking the money from the cash account or sometimes from the bank account. Then, so increases the equity account. So the owner's equity plus the retained. So when the equity increases, we credit it. And when the equity decreases, we debit it. Now, you have an example here. You invest an additional 3,000 into the business. So here you are not taking money out of your business, you are adding money. You are adding more money. So that is why so you are adding money, the cash account is positive. So here you are adding more money. But when you are withdrawing, you minus because you are taking money. So this is negative, it's not positive. But here, mashallah, you're adding some money, which is 3,000. So you debit the cash account and you credit your owner's equity because your equity is increasing. So you debit it with what? Plus. So here we have 2 plus. the cash account increases, and also your share in the business increases. Then the revenue. From the formula, when the revenue decreases, you debit, and when the revenue increases, you credit it. So when you sell a product for 200, you are selling al-mabi'at. So the sales revenue account is minus 200. Why is it minus? Because you are selling. So you are selling, the product is going out. If you are selling a computer, so it is, if you are having 3 computers, it is going to be minus 1 computer. So you are going to have only 2 computers. So the sales account is minus 200, but the cash is plus 200. The money is coming in, and the computer, your inventory is decreasing, but your cash account is increasing. Somebody is buying, so when you're selling, something is going out and the money is coming in. Then the opposite, not the opposite, you receive a refund of $100 from a customer. A customer gives you a refund, you know? So what does that mean? For example, a customer bought some product and now the customer is paying, is refunding you. Because sometimes customers, they tell you, Mohammed, give me this computer, I will pay you after 2 weeks. So when they pay you after 2 weeks, your cash is plus. So you debit the cash, and you also credit the revenue, because your revenue increases and your cash also increases. Then lastly, you have the expenses, masarif. If your masarif increases, you debit. If your masarif decreases, you credit. So here in this case, you pay rent. When you are paying rent for the month for 500. So in this case, your rent, you have to pay the rent. It is increasing. So you pay the rent, you debit 500 and you credit 500. You know? So you are paying the rent. Then the second one, you receive, here you're receiving a credit for overpaying your utility bill. Utility are things like electricity, water bill, internet. So you receive a credit for overpaying your utility. Maybe you paid more, you know, now you receive a credit. So you debit the cash account, which is 50, and the utilities you credit it is minus 50. You know, so you don't have any amount to pay. It's minus because already you had paid. For example, you were supposed to pay for electricity 100 last month, but you paid 150. So that 50, it's a plus to you. So that is the end of our watch. That's the end of our lesson. So the other part of the lesson is just about the examples. So visualizing the debit and credit. So this is how you record all the watch. This is how you record all these transactions from number 1 to number 5. So this is how you debit, credit. For each and every transaction, you debit, credit. So the others, these are all the examples. So during your free time, you'll pass through these examples. So we have a cash sale. What happens when, for example, you sell something and they pay you by cash? What happens when you buy, purchasing, inventory? How do you record it? What happens when you pay rent? When you pay rent, how do you record it? When you receive a loan, when you're paying a loan, when you earn a service revenue, when you're purchasing equipment, how do you record it? When you are buying anything, when you're buying office supplies, when you're receiving money for services, when you're taking a loan, what normally happens? So that is basically, so these are just examples. During your free time, you can just pass through these examples and you can see how we record the transaction in the ledger book using the double entry system. So Phil, so the last thing they're telling you, the total debits must always equal to the total credit. This ensures that the accounting equation remains balanced. At the end of the day, when you finish doing everything, the credit side should always be equal to the debit side. If they are not equal, it means that there was an error in the entry. Maybe you were supposed to debit something, but you credited it. So it basically means you have to review your account again. So these are other examples. These are other examples. When you sell a product, how do you record it? Selling a product. When you purchase, how do you record it? When you're paying rent. So there is money in, money out. When you're taking a loan, how do you credit? How do you debit? When you're paying off liabilities. So at the end of the day, what is the importance of this double entry system? So it ensures that this system helps catch errors. If the total debits do not equal total credits, it indicates that something may have gone wrong. So it helps us to know the errors. So if it is not balancing, it means there is a mistake somewhere. Financial reporting. It provides a comprehensive and accurate financial picture of the business. So we get to know our sales, our assets, our liabilities, our revenues. And remember, we are going to use all this information in the balance sheet, the income statement, and the cash flow statement. Accountability. Each transaction is documented, making it easier to trace back and determine where errors occurred. So we can easily know. It helps. We are documenting everything. So we can easily trace, okay, last week we bought this, last week we sold this. Then better management. Business owners can track revenues and expenses accurately, allowing for better strategic planning. So we can easily track our al-iradat and al-masarif, and we can easily do what? We can easily manage our business. So in conclusion, the double entry system is a vital concept in accounting that ensures accuracy and reliability in financial reporting. Understanding how debits and credit work along with their impact on financial statement is essential. So that is the summary of our lesson. So I will be, some students, they were asking about we only have 30 seconds remaining. So some students were asking about the videos of the lesson. So today I will upload it. I've been very busy, so